Alejandro Zambrano thinks about this as well, market analyst at dailyfx.com. Have you had a look at this at all? Does it really not cross your radar whether people should sell or buy and hold through May through to September?
I've seen this statistics myself. I've read about it already a couple of years ago, and I do believe in it. And also, like in the macroeconomic environment today, we had so much bad data lately. And when I talk with investors, some people are even betting on, say, a recession in the Eurozone. The markets are strong, but because of all of this fundamental news coming in, and also the statistical proof that markets don't tend to rally so much further from May, I would definitely lighten up.
What about the fact that we're in a different world now, and the fact that the markets are rigged by the central banks, and they are pumping so much money into the system, the latest being Abenomics actually, that this all needs to find a home, it needs to find yield, and hence it will find a home in risk assets such as equities rather than, which are still risk assets, bonds, but we just don't look at them in the risk-on scenario.
Yeah, I do agree on that. So the best way for an investor to take advantage of this would be pretty much tracking the trend in, say, the S&P using, say, something like a daily chart. Just keeping an eye how those low develops. And the lows are the most important thing in an uptrend. So I would just keep track of this because everyone is buying now because it's going higher, right? And if data comes in weak, which has been doing lately, you know, people are going to start to get a little bit worried.
Hang on, did you just say the home sales were fantastic? I'm pretty sure we had some of the best home sales we've seen in age. Here we go. Home sales in the United States rose in February at their fastest rate in almost 7 years.
I do agree on that. And already last year I was talking about the housing market with clients that reside in places like Florida, which was telling me that it was very, very cheap to buy. Yes, I do agree some parts of the economy is doing very well. But the big thing that people are looking at is the ISM and the non-farm payrolls. Now, I don't disagree. The U.S. economy is doing really, really good. However, traders just got a little bit too bullish just 2 months ago. If you look, if you quantify and see what people were thinking about the future, they were just a little bit too bullish. And I think that we're gonna see maybe 1 or 2 months more of bad data, and then when people are starting to get really gloomy again, at that point, it's time to go long again.
But a little bit too bullish can actually be a positive thing for the markets because you start to see the bears capitulate. Those people who are sitting on the sidelines are looking at the fundamentals and being incredibly skeptical, been watching this market run away from them. At some point, some of them have to get into this rally as well. So does this mean we could see the time frame extended out? Even if we do get that correction, maybe it just won't come in May this year?
I do agree. I understand what you mean, but I mean, I would definitely lighten up. Just keep track of that trend, because I promise you, as soon as we start to see this not heading so much higher, people are going to be afraid. Everyone wants to sell at the same time. It all depends, of course, I mean, how quickly you can move out of your positions. If you're more of a long-term trader, I mean, I would just keep everything, maybe add on, say, 5% declines. If you're more of a short-term trader, then just keep an eye on that trend and lighten up. Definitely not go short, but lighten up if you see that we're moving down with a couple of percent.
Traders seem to be lightening up on the US dollar of late. There seems to have been a rollover on some of the main trades. Where do you think the US dollar is going from here? Is this the story in May? Traders are getting out of the safe haven currency?
The dollar is interesting, and the currency markets have changed because now people are looking at it from a pro-cyclical or a relative growth perspective. So in the case with the US dollar, data has been weak, so people are saying, okay, quantitative easing will finish, but probably not as early as many investors thought. Just 2-3 months ago, people thought that even in June we'll start to reduce the amount of quantitative easing. So I think this has been delayed for a couple of months. Say if you're trading the euro, what does this mean? This means that you can probably reach up, say, 135 at most. When we start to reach those levels, people are going to be fairly gloomy on the dollar, and at that point, I think it's time to look to buy it again. But in short term, a little bit higher.